Subscribe to my channel Report Stock.
Welcome back to the deep dive. We're your way to get quickly up to speed without drowning in data. Today, we're jumping into the latest from Intuit, ticker INTU, the folks behind TurboTax, QuickBooks, all that. We've got their earnings, their strategy, our goal. Pull out the really crucial stuff for you, what matters from their recent report. Expect, well, a mix of really impressive growth, some cutting-edge AI talk, but also, a few challenges they're working through.
Exactly. And looking at Intuit is useful because, well, they're a great case study, aren't they? You see how a big established tech company tries to innovate like crazy, especially with AI, while still keeping the financial engine running smoothly. It tells us a lot about broader tech trends, really. Personal finance, small business tech, how leaders adapt.
Okay, great context. So let's get straight into those numbers then. You said they're a barometer, and judging by these latest results, things look pretty strong.
Right.
Overall revenue up 16% for their full fiscal year 2025. That's solid. And Q4 specifically, revenue hit $3.8 billion. That's a 20% jump year over year.
Pretty significant numbers, yeah.
But the profitability, that's where I saw some, well, dramatic changes. Their GAAP operating income, that's the standard accounting profit, it swung from a loss of $151 million last year to a positive $339 million this Q4.
Quite a turnaround.
And then the non-GAAP figure, which kind of smooths things out, gives you a sense of the core business that hit $1 billion, up 39%.
Right.
Same story with earnings per share. The EPS, GAAP went from a small loss to a $1.35 gain, non-GAAP. $2.75, up 38%. These
Sure.
aren't small tweaks, are they? These feel like fundamental improvements.
They really are. And what this shows, beyond just growth, is Intuit getting much more efficient. They're expanding, yes, but they're also boosting their profit margins significantly while
Right.
doing it. Well, that's not easy. It shows they can scale profitably even while pouring money into things like AI.
Okay.
And for you, the listener, maybe watching the stock, what does this mean? Well, they've got about $4.6 billion in cash and investments.
Right.
They bought back $748 million in stock just in Q4 alone. Yeah, $2.8 billion for the whole fiscal year. And they just bumped up their quarterly dividend, too, by 15% to $1.20 a share.
So strong finances, returning cash to shareholders, checks those boxes.
Definitely. It paints a picture of a financially healthy company, very focused on shareholder returns.
Okay, so those headline numbers are strong, but I'm curious, where's the engine? Which parts of the business are really, driving this? Let's maybe zero in on the products that are really standing out.
Good question. Because it's not just everything rising equally. Some areas are really on fire. Take TurboTax Live. Its revenue grew. Wait for it. 47% in fiscal 2025.
47%. Seriously.
Seriously. That blows away their own long-term target of 15 to 20% growth.
Huh.
The whole consumer group, which includes TurboTax Live, was up 10% for the year, which is healthy. And then you've got Credit Karma, also very strong. 32% revenue growth in fiscal 25. That really helped their overall tax revenue picture.
Okay, that 47% for TurboTax Live is that's the standout number for me so far. It really suggests people love this AI plus human expert approach. But does that risk eating into their regular TurboTax business? Or is it bringing new people in?
That's the key question, isn't it? It looks much more like expansion. This model, the AI helping a human expert guide you, it seems to really click for people with maybe more complex taxes or just folks who want that extra assurance.
Right, the peace of mind factor.
Exactly. They might have gone to a traditional accountant before, or maybe they struggled doing it totally alone. So it's solving a real pain point. You get the AI efficiency, but also that human touch for the tricky bits. It's a smart blend.
Makes sense.
And with Credit Karma, they know parts of that business can be cyclical, right? Like loan applications go up and down. So their strategy is smart. Get users engaged all year, not just when they need a loan or it's tax time. Make it more of a continuous financial tool. They're investing heavily in data and AI to understand needs better, gain share, and they're pushing into areas that aren't so cyclical, like insurance, plus targeting more prime customers.
Broadening the base.
Precisely. Makes them less vulnerable to those cycles. And don't forget QuickBooks, all-in accounting, up 23% in Q4. Online services grew 19% too, or actually 29% if you pull out MailChimp, which, we should talk about.
Okay, we'll get to MailChimp, but first, the future. AI. Intuit's big vision is this transformative, all-in-one business platform with AI agents. That's their term. They say customers are engaging, using it repeatedly, which sounds great, but, and this is fascinating, they haven't baked any immediate revenue from these new AI agents into their guidance for next year, fiscal 2026. So what does that signal? Are they just being super cautious? Or is AI monetization going to take longer than maybe people thought?
That is the big question right now, I think, across the industry. And Intuit's approach is really telling. The high engagement is fantastic. People are using the AI agents. They like the AI human expert combo we talked about. It shows value.
It's sticky.
It seems sticky, yes. But then holding back on forecasting revenue from it,
Yeah.
that frames this squarely as a long-term strategic bet. They're basically signaling, we're building the future here. The revenue will follow, but maybe not instantly. It's an investment phase.
Okay.
And it says a lot about how they see customer readiness for AI. They keep stressing. Customers don't buy AI. They buy outcomes. A small business owner wants, growth, better cash flow, an easier loan process.
Right. Not the tech itself.
Exactly. So the AI has to be invisible, just making those outcomes happen seamlessly. The value is there for the user, even if Intuit isn't slapping a separate price tag on the AI feature right now. And this all ties into a bigger problem they see, and it's a real one. Customers, especially small businesses, are just drowning in apps.
Oh, yeah. One for this, one for that.
It's a mess. Invoicing here, payroll there, CRM somewhere else. Intuit sees that fatigue. They want to be the single smart place you go for all of it. That's a huge task, consolidating those tech stacks for customers. But if they pull it off, huge opportunity.
It's ambitious. Okay, but like you hinted, it's not all smooth sailing. Let's talk about the headwinds. You mentioned MailChimp. Intuit themselves called it a bit of a drag on growth. That online services number jumping from 19% to 29% growth when you exclude MailChimp. That says a lot. What's the plan there?
Yeah, integrating big acquisitions like MailChimp often throws up these kinds of challenges. It's pretty common, actually. Intuit seems to have a clear plan, though. They're aiming to get MailChimp back to double-digit growth by the end of fiscal 26.
Yeah.
Two main things. A better sales playbook, basically getting smarter about how they sell and cross-sell MailChimp at key product improvements to make it more valuable, better integrated. They're working on unlocking its potential within the whole Intuit system. And besides MailChimp, international markets were mentioned as just a general headwind. Global expansion isn't always easy.
Right.
There was also some chatter about SEO, search engine optimization, maybe slowing down and hurting lead gen. But Intuit pushed back on that. They said, look, AI search is tiny for us right now, like 1% of traffic. And overall, their traffic is actually up quite a bit, mostly from recommendations and people coming directly, not just search.
So they feel diversified there.
Seems like it. Diversified acquisition channels. It's also fair to mention some analysts like Guru Focus have pointed out a few warning signs for Intuit. Things like maybe valuation looks a bit high on certain metrics, or maybe a recent rise in debt levels that bears watching.
Just points of caution.
Exactly. Just part of the balanced view. Even strong companies have areas analysts keep an eye on.
Got it. Okay, so looking ahead then, fiscal year 2026, what are the big priorities? What are they excited about? They called out three main things, right?
Yeah, three key areas they highlighted. First, just continued strong customer growth in QuickBooks Online in the US, especially pushing more into the mid-market, slightly larger businesses.
Okay.
Second, continuing to build out that all-in-one platform with the AI agents we discussed. That's clearly core to the strategy. And third, just doubling down on that mid-market growth overall.
And for their enterprise suite, the IES, any specifics there?
Yes, for FY26, they're really focused on mining their existing customer base to find businesses ready to upgrade to QBO Advanced or IES. They also want to build more of a flywheel with accountants, getting them to recommend these higher tier products more.
Leveraging that partner channel.
Exactly.
Yep.
And just generally speeding up new product launches to capture more of that bigger business market.
So it sounds like continued investment in AI, platform integration, and a real push-up market.
That sums it up perfectly. AI and platform consolidation are central. They believe this approach delivers the outcomes customers want, which in turn lets them keep growing and capture more of the market, especially larger businesses. They seem pretty confident this strategy will keep expanding their potential customer base. It's proactive, not reactive.
All right, so wrapping up this deep dive on Intuit, what have we seen? Definitely strong financials overall, revenue growth, big profit swings, driven by hot segments like TurboTax Live, Credit Karma doing well, a very ambitious AI strategy building that all-in-one platform. Interesting that they're seeing engagement but holding off on forecasting immediate revenue from those specific AI agents.
At the long game there.
And they're tackling challenges, like getting MailChimp fully integrated and firing and addressing that customer need to simplify their tech tools.
Yeah, I think Intuit's story really captures a key theme in tech right now. It's this balancing act. You have to deliver solid results today in your core business, which they are, but you also have to make these bold bets on future tech, like AI. And then there's the hard, maybe less glamorous work of making acquisitions actually work smoothly and ensuring customers clearly see the value. It's about building for tomorrow while performing today, adapting constantly.
That balancing act. It leads to a final thought for you, our listener. If companies like Intuit are building these really smart AI tools customers clearly find valuable for the outcomes they deliver, but they're choosing not to charge directly for those specific AI features right away. What does that tell us? What does it suggest about how long these big tech investments might take to fully pay off? And how could this approach change the kinds of products and services you end up using, whether for your business or personal finances, down the road? Something to think about as this AI revolution continues to unfold.
Thanks for joining us on the Deep Dive.
Subscribe to my channel Report Stock.